American financier, investor, founder of Bridgewater Associates investment company Ray Dalio said that, the dominance of the dollar in the world economy is coming to an end. The financier noted that the USA, Europe and Japan have become dependent on their central banks, and as a result, huge debts have arisen. Could the dominance of the dollar be coming to an end? Famous economist David Card commented on this question. He noted that the dollar has been the world's irreplaceable currency for the last 100 years after taking over from the British pound and gold. The dominance of the dollar dates back to 1944 when the Allies agreed on the creation of a new international monetary system at the Bretton Woods Conference. The main incentive for this is that the dollar can be completely traded in the international currency markets with no capital controls limiting the purchase and sale, the healthy and stable US economy, as well as the efficient, transparent and unhindered Wall Street financial world. In addition, for some reasons, countries also keep certain foreign exchange reserves expressed in dollars, so that the first can fulfill their foreign obligations, and the second can support their local currency in times of serious threats. We witnessed this during the crisis period, which we witnessed in the last 3 years, especially during the COVID pandemic. Although it is not official, it is one of the factors that determine the dollar to serve the whole world as a de facto international currency and a safe harbor. The Economist says that today a significant part of financial transactions, global debt, currency reserves and trade invoices are expressed in dollars. However, despite its unique advantages and strong demand, the dollar sometimes causes changes in the US economy to spread to other countries. For example, the strict monetary policy implemented with the inflation of the last half-century recorded in the United States affected the exchange rates, foreign debts, and imports of individual countries in one way or another with the appreciation of the dollar. This has increased the probability that the world will try to move away from the dollar by rekindling the currency war in the situation where the countries are united under a single monetary umbrella and have a very serious effect on the incomes of other countries. As the first option, gold, which is a historical investment and exchange tool, and then Bitcoin, which is considered to be the challenge of the new era, came up. Also, in a short period of time, the currencies of China and Russia have made some attempts to dispute the current number one status of the dollar, The Economist said, adding that it is unlikely that the dollar will lose its importance in the near future. It can be concluded that this is not an overnight process and requires a lot of time. More importantly, the sooner this happens, the sooner the global economy can collapse. Even countries that are interested in getting rid of dollar dependence and acquiring the status of world currency are sensitive to this process. We saw this in the example of China's anxiety during dollar inflation. The reason is that China has a high dollar-earning exporter status and trillions of dollars in US Treasury debt securities. Because China does not have an alternative market to the United States, and if it tries to protect its assets, it may cost it 500,000 tons of gold. This means 2 times the amount of gold produced in the history of the world. It is impossible for the ruble, which is backed by the energy factor, to compete with the dollar at a time when the world is transitioning to a green economy. A similar factor limiting the circulation of both the ruble and the yuan is the implementation of tight capital controls in the countries they represent, the expert said. Thus, we can be sure that the dollar will keep its throne for some time. However, the calls for deglobalization intensifying on the horizon, the division of the world into minimally connected blocks, as in the Cold War period, may create a basis for changing the current model for cross-border payments. This, in parallel with the dollar, which provides a reserve asset for the financial system due to its liquidity, can stimulate the limited circulation of another currency, euro, pound, yuan, etc., intended for the real economy, supply chains, commodity markets and trade.